Well, hello everybody and welcome to this webinar supported by the ICE Ben Fund and Support Network, Switch On to Self-Employment. My name is Sarah Steele and I'm the Director of Better With Money, and we provide financial education in the workplace really with the aim of reducing money stress, and I'm going to be hosting the session today. Now, according to a recent survey I saw by a business loans company, 64% of the UK workforce wants to set up a business and be their own boss. And this stat actually increases amongst 18 to 24-year-olds, up to 83% of people who dream of self-employment. So what's really driving these numbers? Well, apparently over a third of the UK workforce dislike their current job. And if we look at those 18 to 24-year-olds, that age group are the most driven by financial gain. There's actually over 4 million self-employed people in the UK right now. So if you want to set up your own business and you want to be self-employed, how do you get started? And that's what we're going to cover today. So in this session, for around the next 25 minutes, we're going to cover the self-employment basics and considering if it's right for you. Then we'll look at the different business structures available. Then how to budget, considering budgeting for those ups and downs. Then we're going to take a look at the tax that you'll need to pay if you're self-employed. One of the things that's really easy to forget that we're going to cover is the business insurance, and then we'll finish off with the business checklist on where to go for more information, and then we'll end up with a Q&A. Now, just a reminder that we're providing guidance and information today, not advice. But as I go through, I am going to be sharing just a few of my own business experiences from when I took on my own business. Now, there are plenty of reasons to go self-employed. You get to be your own boss and you can work more flexibly for one. Depending on your choice of job, you might be able to command a much higher rate than the salary you'd achieve as an employee. But there are some downsides to employment too. So let's get started by looking at the self-employment basics and just what is it that you need to consider to see whether self-employment is going to be the right avenue for you. So firstly, do you have any money to set up a business? Now, when I started my business providing financial education, I paid myself just a fraction of what I used to earn as an employee, just for the first few months anyway, because all the money I had coming in was used to pay for my new laptop, the IT software that I needed, an accountant, the dedicated Wi-Fi. Now, your business idea might be very different to mine, but you are likely to need similar things. So just think about how are you going to cover your daily living expenses whilst you're really getting that business started and building up your income. Also, can you cope with periods of little or no income? Say, for example, the business was slow for a few months. And what if your income does change at different times of the year? Again, for example, my business is quite slow in August and December because that's when lots of people go on holiday and they don't want financial education. So just think about how is your business going to be affected by the seasons or the holiday periods? And do you feel confident about managing your own business? For example, you're going to have to keep thorough records. You're going to have to make sure that you're bringing in more money than you're spending. You're going to have to complete tax returns. So you're going to need a basic level of admin skills to run your business, or if you don't have that, you're going to need to pay somebody else to do it for you. And have you thought through the impact of losing employee benefits that you get whilst you're employed? Things like holiday pay, sick pay, your employer pension contributions. So how are you going to replace these if you still need them? And also think about the personal things. Have you got any life-changing events coming up, like you might be moving, having a baby, things that are going to demand time off or extra cash, and how are you going to cope with those? And one of the things that I think is really important actually is, have you thought about whether you're going to miss having colleagues around you? Because running a business can be lonely sometimes. You have to have that motivation to get up in the morning, keep going without people around you holding you to account. Have you got the motivation to do that? And do you have the workspace you need to run your business? And really, the last thing I want to say is when you are self-employed, it's really a case of getting stuck in. You have to do every job. And one of the most important jobs you'll ever have is finding those clients. So have you thought about where you're going to find those clients or customers that you need? Do you have the skills to do those sales? Now, looking at research around small businesses, running out of money is the #1 reason why businesses fail, and that's a result of not getting enough customers. Now, when I put together this slide, I really wasn't intending to put you off becoming self-employed, but really what I want to do is just make sure that if you really are going to go into self-employment, that you do it with your eyes wide open. Just like any life decision, it needs to be well thought through and considered from all angles before jumping in. So let's look at the pros and cons then in a little bit more detail. And there's plenty of perks of being self-employed, and the list on the left-hand side certainly isn't exhaustive. I mean, firstly, you can absolutely do something you enjoy. It's really that chance to explore your creative and your entrepreneurial side as you build your own business. And your work can be more varied because you might be working on different projects for several clients all at the same time. And being self-employed gives you that flexibility, that control, really allowing you to choose your own hours to fit your work around your other commitments and your responsibilities, things like your family and your hobbies, which is all great. And you do have that potential to demand a higher salary for the work that you do, rather than being employed and salaried. And what I found, it's incredibly satisfying. You know, as your business starts to grow, you know you're doing a great job for clients, and you start to see that financial gain. But there are challenges too, many that we spoke about on that slide before, the things like the startup costs, finding the clients, doing your own admin. But don't forget, you're also going to have the responsibility of making sure that you comply with industry regulations as well. So for my business, for example, I have to maintain written policies, things like health and safety, data protection, information security, cyber security, just to name a few. And I also have to make sure that I'm working to employment laws and I've got all the necessary qualifications to provide the service I do. Now, again, your business might be totally different to mine, but it's just really important up front to find out which laws, which rules and regulations you're going to have to abide by. From a financial perspective, it can be more difficult to get approved for things like renting a property, getting a mortgage or a loan, because you don't have that regular salary and your income might be going up and down. And from a time perspective, it can be difficult sometimes, particularly when you're starting your own business, to separate your home life from your work life, really to get that good work-life balance. And ultimately, I think the thing about self-employment is that you bear the responsibility for the success or failure of that business. But if you do your homework, you get the foundations in place, it can be really, really rewarding as you see your business start to thrive. So how can you set up your business then? Now, after considering those pros and cons of self-employment, the next thing you have to think about is, how are you going to set up your business? Now, for every business, no matter how big or how small, you need a legal structure. And you can choose to be a sole trader, a partnership, or a limited company. So let's just run through what each of those mean. Now, a sole trader is essentially a self-employed person who is the only owner of their business, the sole owner. It's the simplest business structure available. Then we've got the limited company. This is its own identity. It means that the company is separate from its owners or its managers. You can still be one person in your business and have a limited company, but you would be the only shareholder and the only director within that. The other one here is a partnership. And this is a formal arrangement where you get together with somebody else, 2 or more people, to manage and operate a business together and share its profits. Now, if you want a little bit more information about each of these, you can go onto the gov.uk website, set up business, as I've shown at the bottom there. But most people choose to either be a sole trader or a limited company. And according to the Department for Business Innovation and Skills, last year, 59% of all businesses in the UK were sole traders. So that's about 3.5 million businesses. 34% were limited companies, so that's around 2 million, and 7% were partnerships, so that's just over 400,000 companies. So for that reason, we're going to look more closely at the differences between the most popular, the sole trader and the limited company. So starting with the pros then of being a sole trader. Now, the absolute main advantages of this is that it's really easy to set up as a sole trader. Very little paperwork, you can start straight away. all you need to do is set yourself up for self-assessment with HMRC, and it is a good idea to do that as soon as you can once your business starts trading. But as things currently stand, your deadline for registering as a sole trader is October the 5th in the tax year after you started trading. So if you do set up your business in this tax year, the 2022-23 tax year, you'll have to register by the 5th of October 2023 and then complete your tax return by January 2024. So quite a lot of time to get yourself registered and to do that admin. And as you don't have to register your business elsewhere, it means that your tax return is private and your business has far greater privacy than if you had a limited business who has to put all of their details on the Companies House website. So there's the pros of the sole trader. So let's compare that with the pros of a limited company. Now, unlike sole traders, a limited company is totally separate legally from its business owner. It is its own entity. So this means as an owner, your personal assets are totally separate from your business. So if your business does go wrong or there's a claim against you, you only stand to lose the money that you've put into the company. So as an owner of a limited liability, you have that protection. As a sole trader, you don't. Also, with a limited company, once you've registered that company name, nobody else can use it. With a sole trader, you don't have that. You could end up with the same name as somebody else. Now, the other advantage of limited companies is that they can be far more tax efficient than sole traders, because rather than paying income tax, you pay corporation tax on the profits. And corporation tax is currently 19%. And we're going to come on to tax in a moment just to compare the two structures. In addition to this, there is a wide range of allowances and tax deductible costs that a limited company can claim against its profits to make it far more tax efficient. Right, moving on now to the cons, the disadvantages of a sole trader. As we've already mentioned, sole traders have unlimited liability. It's because there's no legal difference between you and your business. So if your business gets into debt, you are personally liable. And that does mean that if you're a sole trader, you can lose personal assets if things go wrong. The other thing is that raising finance can be tricky. Banks and other investors do tend to prefer limited companies. So if you're trying to raise money to grow your business, that can sometimes be difficult and limit the expansion opportunities of sole traders. And when we look at tax rates, again, you'll see that your business, once you start reaching higher levels of earnings, it might be more lucrative to switch over to a limited company. Right, let's compare this then to the disadvantages of the limited company. First of all, there's a lot more admin to do up front to set up that business. You're going to have to pay a fee to register with Companies House. That's £12 online or £40 if you do that by post. And you're also going to have to let HMRC know the date that you officially started up. Now, if your company expects to take more than £85,000 per year in income, you must also register for VAT. And as a director of the company, you are going to have fiduciary responsibilities, which basically outlines what you have to do as a company director to keep your company legal. For example, you're going to have to do annual accounts, you're going to have to file an annual return to Companies House, and submit a company tax return to HMRC. These responsibilities, they can be time consuming, they can be costly, because you're either going to have to do that paperwork yourself or hire an accountant to do that on your behalf. Now, all information about your business, the directors, the accounts are also all going to have to be on Companies House, and that does mean that details about you and your company earnings will be shown publicly. But ultimately, I mean, that's just a few of the pros and cons there to get you started. You just need to work the difference between the sole trader and the limited company, and think about how's it going to impact on you from the paperwork through to the profits. When I decided to take on my business, I just found a friendly accountant who specialises in looking after small businesses, and I just chatted through the options with him, really, and I found his expertise valuable. In the end, I went down the limited company route, mainly because my clients tend to be larger organisations who expect to be working with limited companies. But it's also worth talking to other business owners too about their experience and what they found. Once you've chosen which type of company you're going to set up, then we need to start thinking about the finances. This is really important. If you've set up a limited company, you are going to be required to have a business bank account. If you're a sole trader, you're not required by law to have one because there's nobody else involved, but I would highly recommend it because it's very helpful to have your business transactions totally separate to your home and your everyday expensive transactions without muddying the water, particularly when you get to do that tax return that you'll need to do at the end of the year. So here is my 5 tips for managing the business budget, really to get you through those ups and downs. And the first one, I guess, just like life, it's just to get organised. Make sure that you've got a system for organising your receipts, your customer invoices, your bills. You're going to have to record this information because you're going to need it when you fill in your tax return. Now, you can do something as basic as just putting it into a notebook or putting together an Excel spreadsheet. But there are some really great accounting packages out there, such as Xero, SageBooks, QuickBooks, and Sage. They're all relatively inexpensive and they allow you to record everything electronically, as well as create and chase invoices for clients or customers, and really to produce those business reports as well. Just to give you an idea, for my business, it costs about £30 a month to use that software. And I didn't have any previous experience of using them, and I found the software really easy to use, very intuitive. So that's number 1, get organised. Number 2, and this will be the make or break, work out how much you need. Work out how much you need to pay yourself each month to cover your household expenses and your living costs, but also work out how much is it going to cost me to run my business each month, to keep up with my financial commitments. It might be that you've got IT costs. You might have equipment that you need to provide your service. You need to build in the cost of your accountant, the cost of your business insurance, and come up with a realistic monthly cost that you are going to need to cover as a minimum. Once you've done that, then you need to create your budget. And this is really calculating what you need to bring in order to cover the costs that you've got, because you want to be in that position that the work invoiced at least covers that, and that you're not spending more than you're earning each month, because that's where your company is going to start to lose money, and that's when you'll get into financial difficulty. And as I said at the beginning, this is probably where you're going to need that cash buffer as you set up, because you're going to have higher business costs in the first few months, and it might also be that you can't afford to pay yourself that much as you're getting the clients and you're trying to generate that income. So having that cash buffer to get you through the first few months is going to be really important. Once you've worked out your budget, then you're going to have to keep track of that money coming in and that money going out. And I would suggest that you build the time into your month to record these transactions and to balance the books. Now, I use Xero, but I still have to create invoices, send them to clients, and as the money comes in, I need to reconcile which money relates to which invoices, and I have to chase any invoice that's not paid. And I also need to keep track of any business expenses I've got, such as travel, that can be offset against profits. So just 1, think about how you're going to do that, and 2, think about how much time do I need to set aside where I can't do work for customers, where I need to be doing kind of my business organisation. And then number 5 is to create your balance sheet. Now, if you're using a software package, it's going to create that ongoing balance sheet for you, which shows how much money you've got in your business, which is your assets, and how much money you have to pay out. Things like your tax and your VAT, and these are known as your liabilities. And your assets versus your liabilities forms your financial statement for your business. Now, if you're not going to use a software package, you're either going to have to do it yourself or you'll have to get an accountant to do it for you. Now, one of the absolute best bits of advice I ever got told, just as I was taking on my business, was that as you get money coming in from clients, just automatically put aside 20% of that money to pay your tax bill. And that would be true whether you're a sole trader or a limited company. It's not the perfect amount, but it's a very good starting point, and it will avoid the fact that you'll get your tax bill at the end of the year and not have any money to pay it. So let's go on to tax and look at that a little bit more closely. And we're going to start with paying tax if you're a sole trader, because it is going to be different to if you're a limited company. So the tax you pay as a sole trader is the same as an employee. So first of all, if your earnings are under your standard personal allowance for the year, and currently that's £12,570, then you'll pay no tax, because your personal allowance is the amount of money you can earn without having to pay any tax. So that's that 12,570. If your earnings go above that, then you're going to pay 20% tax on any earnings you've got up to 50,270. Then if your earnings go above that, on the portion between 50,270 and 150, you'll pay 40% tax. And then just like an employee, if your earnings go above the 150, you'll be paying additional rate of 45%. However, the difference between being self-employed as a sole trader and an employee is that you're not going to be paying that tax each month through payroll. You're going to have to do a self-assessment tax return at the end of the year and pay it as one lump sum. And that is why it's really important to accrue for that and put that money aside as you go month on month. You're also going to be paying national insurance depending on your profits, and this will be paid alongside your tax return as well. You'll pay Class 2 national insurance if your profits are more than 6,275 each year, or you go to Class 4 if your profits go above 9,881. So again, just another cost to accrue as you go, and I have put what the rates are for Class 2 and Class 4 on the slide here. And it is really important to pay national insurance, because that is what's going to entitle you to state benefits, such as the state pension when you retire. Now let's look at the tax for a limited company, slightly more complicated. I mean, first of all, even if you're the only person in your limited company, you're likely to set yourself up as an employee, so you'll be the sole employee, and any salary that you take as an employee, you will pay income tax and national insurance just like any other employee on the salary you receive. So what most company directors do is they pay themselves a salary which is equivalent to the personal allowance, which again is that 12,570, because it then means that there's no tax to pay on that income. And you might have seen in the spring budget that from July 2022, the national insurance threshold is being increased so that it's the same as the tax threshold. So you won't need to pay national insurance on that first 12,570 either. If you do choose to pay yourself a higher salary, then you'll need to deduct tax and payroll, tax and NI through your payroll, just like you would if you're an employee. However, what most company directors do is they take that base salary of that 12,570, and then on top of that, if the company makes any profit, you can then pay yourself dividends as a director of the company. And the first £2,000 of dividends to a director is tax-free. And then if you go above that 2,000, you then pay 8.75% tax on the dividends up to 35,500. And then going above that again, that tax rate rises to 32.75. But as you can see, that is still less than the 40% tax you'd pay as an employee if you flipped into that higher rate tax, which is when you're earning over 50,000. But in addition to the personal tax that you're going to have to pay, the company also has to pay that corporation tax of 19%. So again, as that client money comes in, set aside that 20% because it's going to be roughly equivalent to the corporation tax that you need to pay. So that's just a brief whistle-stop tour of tax. Now, regardless of which business structure you choose, every business brings its own unique risks, and therefore you will need business insurance. Every business is different. The insurance you need will depend on the business you've run, but I've outlined the three key covers here. The first one is public liability insurance. Now, this is going to protect you from compensation claims if someone is injured or their property is damaged and they hold your business responsible. Now, you can choose between £1 million and £10 million worth of cover, but often this insurance can be absolutely essential for securing client contracts. So if you are going to set up a business and you're not sure how much you're going to need, ask your clients or your potential clients, what public liability insurance would you need me to have if I was going to work with you? And that will tend to tell you the cover level that you need. The next one is professional indemnity insurance. This is to cover you or your business if you make mistakes that cost your clients money and they make a claim against you. This is particularly important for a company that provides advice or offers a professional service. And the third one here is employers' liability insurance. And any business with employees must have employers' liability insurance by law, because it protects against employees who might injure themselves or fall ill at work as a result of something your business does. Now, you can also get additional cover for directors of the business to protect themselves from claims of wrongdoing or cyber attacks, business equipment, business interruption. There's a whole host of insurances out there. So it's really going to be a case of weighing up potential risks and deciding what's important to your business. But it is only employers' liability insurance that you must have by law. And remember, as I said before, any business insurance that you have, remember to add the cost of that into your business budget. So on this slide, I've just brought together the main things that you're going to need to do if you're setting up as a sole trader or a limited company. So this is your business checklist to refer back to. Now, I don't intend on going through all the points again, but I do just want to mention that bottom left-hand box there, the check for the government business grants, because to help business startups, there are small business grants available both from the local councils and other organisations, and the easiest way to look for those is the government's Finance Finder tool at the web address shown, because if you get a grant, you don't have to pay it back, and it can really help you at the start when you've got all of those additional business costs. If you'd like more information about becoming self-employed, I've referenced some really useful websites here where you can get some more information. And the bottom one there, the Money Saving Expert, that does a comparison on business bank accounts. Now, just a bit of experience for me, I took on my business during lockdown, and I found that the traditional banks were going to take a few weeks to set up a business bank account. I didn't have a few weeks. I was starting straight away. I was getting client money in. So I actually looked at the challenger banks, the Starling, the Tide and the Monzo. They have far more efficient online processes. And you'll find with most of them, you can set up in just a couple of days. But do your research, find the bank account that's right for you. And also look at what other services those bank accounts provide. You'll often find that they will provide additional services as part of their packages, things like HR or legal services that you can tap into, and they can be really valuable. Now, probably the most valuable advice I could give you as a business owner myself is to look at your local networking groups for business or your local Chamber of Commerce, because it's at these local business networking events that you're going to find other small business owners. And not only can they then provide you with support if you're having one of those days where you're thinking, why am I doing this? I need some encouraging words. But also at the group that I joined, I found my accountant, I found the person to do all my business printing, I found a blog writer, a social media expert. So all the skills that I didn't have, I found somebody in the group that had that. It's really a really great way of creating a business team, even though you're working alone. Just to finish off then, I've put up the details of the ICE Ben Fund and Support Network, who have kindly sponsored the webinar today. They can provide you with financial, workplace and wellbeing support for you and your families. So I've put the website and the helpline numbers here so that you can find out more if you need to. Right, so that just brings us on to questions. We've got time just for sort of 2 or 3, so I'll do those. Any other questions we've had through, we will do a question and answer sheet, which will be posted alongside the recording of this webinar. Okay, so I mean, the first one is about pensions actually, and I did mention that early on because obviously you don't get employer pension contributions. It says, what is the best way to pay into a pension if I start my own business? Yeah, this is interesting. Now, if you have been working for an employer before, you may well find that they have a pension or that you were a member of a pension that you can almost take with you. And they tend to be called group personal pension plans. They're pensions that are in your own name. And even if you leave that company, you still have the ability to pay into them via direct debit. So that's the first thing to consider. Have you already got a pension that you can just carry on paying into? If you don't have that, there are several providers out there who can provide low-cost pension schemes and specialise in smaller businesses. So a few of the names, there's Smart Pension, there's Nest, there's the People's Pension, there's Cushion. All of them have good, reasonable charges on that, and you can set those up just for one person, or if you have got employees and you do fall into the auto enrolment laws, because you have to automatically enrol your employees if they're over the age of 22 and earn more than £10,000, you can do that by one of those. But a simple web search for auto enrolment pensions should get you started. The next question is, does employer's liability insurance cover me if I get sick? No, that isn't what employer's liability insurance is for. That's there to help you pay compensation if one of your employees becomes ill because of the work that they've done for you, or because they've been injured. Let's say they tripped over the carpet in the office and broke their leg and they made a claim against you. That's what employer's liability insurance is for. If you want something to cover you directly if you get sick, because obviously with a lot of business owners, if you get sick, that's it, the business stops, and you don't get the income. So if you want to protect your income, you need to look at income protection insurance for business owners. And again, I did a simple web search and it'll bring up lots of articles on the subject and providers of that insurance so that you can do a comparison. Right, I'm going to leave it there just because of the time, but as I say, we will do a question and answer sheet so that you can see all the questions that were asked and get that further detail. So it just leaves me to say thank you very much for joining, and we hope to see you at future webinars. Goodbye.